To make a move like that, you have to have kahunas and conviction.
Long term, I'm bullish. We could see about a 20% correction next year.
This is Josh Jelinski, the financial quarterback. Don't touch that dial. Now, the FDIC came in and they protected every depositor. But what happens when other banks go under? Now, so far, the FDIC hasn't failed anyone since, the 30s when it was created. So they've done a good job. Still, recent events bring up old questions about just how safe your cash is at the bank. Now, we're going to tell you how FDIC works and whether your deposits are still secure. In a moment of panic, customers literally run to the bank. Now that happens electronically, and because electronic transactions are made at high speed, bank runs are faster than ever. In the case of SVB, it was a dizzying 48 hours. While SVB also had an unusually high percentage of uninsured deposits, there are other mid-sized banks that could be at risk of large withdrawals. Could this happen at other banks? The short answer is possibly. This is happening in part because of the Federal Reserve's sharp rise in interest rates. Banks who own long-term bonds that are currently paying low interest rates that nobody wants, when the interest that banks are getting on these longer-term bonds is lower than the interest rate that they are offering depositors on their savings accounts, less money is coming in than they are paying out. Many banks are seeing large withdrawals from cash depositors who are looking for higher rates to make more money. All of this is creating stress. What about my cash at the bank, you may be thinking? Banks are covered by the FDIC, which insures your money up to $250,000 per depositor per account category. Since its creation in 1933, no depositor has lost insured deposits due to a bank failure. You may have a short time without access if a bank is taken over, but the government generally has a very speedy process to get you back to using your cash in short order. However, if you have more than $250,000 in deposits at any one bank, you may want to reach out to a private banker at your institution or split into different accounts at different banks. Now, how is this different than 2008? According to CNBC, they quote someone named Jude Boudreau, who says this doesn't seem like a financial crisis yet. Jude Boudreau is a CFP in New Orleans. Well, no offense, Jude, but I would hate for you to manage my money. This is a pretty big crisis. The two banks we are talking about right now specialized in riskier assets, particularly crypto and tech startups. As I talked about last week, though, these tech startups account for something like $18 trillion in the economy. The likelihood that this becomes a national wave, he says, seems low. I think it may be higher than we think, which is why they stepped in and said, we're not just going to... Notice that the FDIC didn't say we are going to insure deposits up to $1 million or up to $500,000, which would have been sensible. They said, no, we have to bail out the guy going to Maui, the founder of Silicon Valley Bank and others. He gets to keep his $3 million beach house. He gets to keep his, $100 million deposit that he got from cashing out. All these various people, they're protected. Why? Are they donors? This bailout was very irresponsible. They could have come and said, we're going to insure up to $1 million in deposits, or $5 million, or $10 million. No, they said unlimited. So, unlimited depositor insurance. But is that only for SVB? Is that for every bank? I guess it's for every bank, but we'll see. That's what they were saying. And then remember Lehman? That's when federal regulators and government officials let Lehman go completely bust. So you got to be careful. Here's the moral of the story. Big government can't save you and won't. There will come a time when they say, yeah, you know what, that bank, we're just gonna let that bank fail. Who did those people give to? Oh, they gave to this person, this political campaign. They're finished. Last year, all of these large banks passed these tests. These institutions are in a stronger position now because of new rules imposed after the financial crisis, including higher capital reserve requirements and annual stress tests. So they say, the same government officials that, bungled COVID are saying there's nothing to worry about. Well, I'll trust them for now. So how do you protect your money? Well, very simply, limit your cash at the bank to $250 per depositor per institution. That's one way to protect yourself. A second is to go into accounts that operate under what's called not fractional reserve, but legal reserve. That's where they have dollar for dollar reserves in the bank.